When Warren Buffett, the Oracle of Omaha, speaks, investors from around the world listen. After building Berkshire Hathaway into one of the world's largest companies, Buffett amassed a fortune of more than $70 billion, placing him among the richest people on the planet, promising to give away nearly all of his wealth to those in need. Now, in these difficult times, we turn to this stock market sage for his financial wisdom and calm. In this episode of Influencers, I sit down with Warren Buffett as we discuss the markets and the pandemic that has brought the global economy to a near halt. Hello everyone, I'm Andy Serwer. Welcome to Influencers and welcome to our very special guest, Warren Buffett, Chairman and CEO of Berkshire Hathaway. Warren, nice to see you.
Good to see you.
So it's March 10th and it's the day after the stock market crashed. The Dow was down over 2,000 points. Oil cratered to $30 a barrel or so. The 10-year bond went to below 0.5%. What the heck is going on, Warren Buffett?
Well, I told you many years ago, if you stick around long enough, you'll see everything in markets. And it may have taken me to 89 years of age to throw this one into the experience. But you know, markets, if you have to be open second by second, they react to news in a big time way. I mean, it's not like the market for real estate or farms or things of that sort.
Does this remind you of any other time?
Well, I've certainly been a fair number of times when panic has reigned in Wall Street. And October 19, 1987, and the period around it. I mean, there was panic. At the close of business on Monday, October 19th, most of the specialist firms, which were important in those days on the New York Stock Exchange, were broke. And the next morning, there was a check due to the clearinghouse in Chicago that didn't get there. And sometime late in the morning, a decision, I think Phelan had made the decision, we're going to stay open. But it was really close. That was, and of course the financial panic. There were, you had 35 million people on September 1st that weren't worried at all about their money market accounts. On September 15th or 16th, they were all.
How concerned are you about the coronavirus situation, Warren?
Well, you got to defer to the doctors on that. But you can get into all these figures about how flu regularly kills 20 times as many people in this country as, or 40 times maybe as much as we've seen in the way of deaths, even more than that. But it is a pandemic. It has really spread. So we've got something that we don't know how long it'll be with us. We don't know how severe it'll be. But there will be uncertainty about that for a considerable period of time. There has to be.
What precautions are you taking personally? Have you changed any of your habits?
Well, I'm drinking a little more Coca-Cola, actually. That seems to have warded off everything else in life. I mean, I'm 89. I just had two different doctors tell me I'm in much better shape than I was a few years ago. I'm not sure what I'm doing to get in better shape. But by accident, I mean, I had an annual heart check where I wear something around my waist for a couple. I think I said it's never been better. So, I really, I'm a probabilities guy by nature. So there's going to be 2.8 million deaths this year, and at age 89, I'm a little more likely to be than I was in that group than 10. But 2.8 million, and what have we had so far? I mean, it will grow, but I've always felt a pandemic would happen at some time. I mean, I've actually used that term. I mean, in describing things that can interrupt the progress of not only this country, but the world. It won't stop the progress of the country or the world. I mean, this is a terrible event that's occurring. We don't know how terrible, and it may not turn out to be that big a deal, when we get through, but it may turn out to be a very big deal, and we just don't know, and I certainly don't know, and nobody knows. But there will be other things that happen in the world in the next 5, 10, 20 years. That's the way the world works. It's not a totally even course. The progress of mankind has been incredible, and that won't stop. I mean, you flew out here, yesterday or today, and you flew over a country that 250 years ago, there wasn't anything here. That's only 3 of my lifetimes, and there wasn't anything here. And now you've got all these bountiful farms, and you got 260 million vehicles in the country, and you got 80 million owner-occupied homes, and you've got 155 million or whatever it is, million people working. And I mean, it's incredible. I went, when I had a medical check the other day, I went to incredible medical facilities that are just 2 or 3 minutes from here, and that wasn't here. Wasn't even here 100 years ago, and so we keep making progress. We haven't forgotten how to make progress in this country, and we haven't lost interest in making progress, and that will benefit to varying degrees all kinds of people, including around the world. But there will be interruptions, and I don't know when they will occur, and I don't know how deep they will occur. I do know they will occur from time to time, and I also know that we'll come out better on the other end.
And then what about the banks? And boy, they have been hit awfully
hammered,
hard because of rates and the exposure to the energy sector, right?
Yeah, and you don't know what other exposure there is. I mean, the credit standards have been pretty darn good, and the quality of what's on the books has been terrific, and the liquidity and all of that. The banks are in a whole different situation than they were during the 10 or 11 years ago. But you don't know the nominals that topple when airlines get bad, and then that affects energy demand. It's just they're using less fuel than they were 3 weeks ago. So there's ripple effects, and there always will be in recessions. That's the nature of recessions, as you get ripple effects. We get ripple effects on the railroad, but there's just there's less intermodal traffic moving now because of the supply chain interruptions and all that sort of thing. But you look at, again, I mean, in 1942 when I bought my first stock, the Philippines were about to fall. I mean, and the day I bought it, the Dow literally was down 2%, and 2% then was only 2 points, literally. It broke 100 on the downside. But 2%, I felt it. I mean, I went to school in the morning and I bought these 3 shares, and when I came home at night, I already had a loss in them.
Yeah, well, I'm glad you kept with it because other people might have gotten discouraged.
But I mean, all the other kids in 7th grade had their money in something else.
Right. Getting back to banks for just 1 second, Warren,
Sure.
and a specific name, which is Wells.
Yeah.
And are you getting frustrated with Wells Fargo?
Well, I think they've been through a lot of problems, but I don't think that the fundamental franchise and all of that, I mean, I'm fine with that. I forget whether it's in 1 out of every 3 households in the country, and I mean, the mortgage service, they're huge. It went through something that various other companies, Geico in the early 70s had its troubles. American Express in 1964, when we got into it, it had the salad oil scandal, which everybody's forgotten about, but it was a terrifying event then. So Berkshire, something will happen to somebody. You can't run a place with 395,000 people and not know that something is happening all the time, and you just hope you catch it fast. And the moral of the Wells Fargo story is when you hear about something, you've got to act fact. You can have incentives out there that are incentivizing the wrong thing, and we've had them. Everybody's had them. I mean, anybody has a sales force makes mistakes sometimes in what they incentivize, and bad practices will spread if not jumped on, and that's what you saw at Wells. They didn't. I don't see how in the world they made any money out of the phony accounts, but the cost. Again, there's a ripple effect. I mean, when something goes wrong at Berkshire, if it doesn't get corrected, there'll be more problems subsequently, and when I was at Solomon, Charlie gave me the formula. He said, get it right, get it fast, get it out, get it over. And anytime you see a problem, and you're a responsible party in corporate America, that means just get it right, get it fast, get it out, get it over, and don't skip and just put that right in front of you and go to work on it.
Yeah, maybe I don't know about the get it over part with Wells. I mean, it just
if you get it right and get it fast and get it out, you will get it over.
Right. Okay.
And if you don't the other things you've got, you'll never get to get it over.
Okay. Fair enough. Let's switch over to talk about oil. You are an investor in the sector through this Occidental Petroleum deal from last year. You put in $10 billion, I think, and maybe some more after that. I know you get preferred dividends, but that investment has to be underwater at this point. And what's your thinking?
Well, the 10 billion is a preferred stock with warrants, and there is no market in it.
Okay.
I mean, it's a private deal. But we also have about 2% of the common stock, and that's down significantly. And as I said when I did it, I mean, the biggest variable is the price of oil, and I don't know the price of oil, and every day it gets quoted. If you have an opinion on oil, you can buy or sell oil either 1 year out or 2 years out or 3 years out or something of the sort. And when oil was in the 30s, there's a lot of agony in the oil patch. And the math just changes terrifically. I mean, it just doesn't pay to drill in a lot of areas. And the Saudis can turn out a lot of it with practically no operating costs, or I mean, they've got very, very, very cheap operations.
I mean, between that war between the Saudis and the Russians, and then also perhaps the secular decline of demand, given concerns about climate change, is this really a great place to invest?
Well, I don't think the secular demand will change that much, but certainly the immediate demand has changed. I mean, the airlines need less, and people drive less if they're working out of their homes, and you can change. When you're talking about something close to 100 million barrels a day, if you change it by 5%, that is huge.
I was reading in your annual letter, on the other hand, that you're so proud of Berkshire Hathaway Energy, which is so big in wind power and has this whole different business model. So you think that alternatives actually have a real future?
Oh, alternatives have a future. They are the future over time, but you can't change the world, the base of the world. I mean, you've got 260 million vehicles on the road, or whatever number it is in the United States, and I don't know how many around the world. And they're not changing what they use tomorrow. And the average age of the American vehicle, the auto, I think is 11 to 12 years, something like that. And so the world can't change dramatically. And if anybody thinks you can change energy sources 10% in a year, it just doesn't work that way. But the world is going in the right direction in terms of working toward minimization of carbon.
Speaking of those cars, I mean, look at Tesla and what Elon Musk is doing. I mean, that kind of is a revolution, right?
Well, it's an important change, but if you guessed on the penetration of electric cars, let's say we sell 17 million or something a year in 2030, when I'll be 100. I would say that I'd be surprised if more than a third of those would be electric. Well, that's 2/3 that aren't, plus all the ones so of the total vehicles on the road, it still might be 10% electric tops or something like that worldwide. I mean, you can't change this mass of transportation. You can't change it in a year or two. It is changing and should change, but in terms of just the math of replacing, if we said we're going to junk all the cars we have, well, the economy would stop. I mean, we can't produce we couldn't replace them.
What do you think of Elon Musk, though? If you met him, and would you invest in Tesla?
Well, I think you're trying to bait me a little bit.
No, I'm just asking you. You can say no, or yes,
listen,
yes,
he's done
yes.
some remarkable things.
Okay.
He's done some remarkable things.
Have you met him?
Oh yeah, he joined the Giving Pledge some years ago. I've only met him once or twice, but yeah, that's it. I've talked with him, but not for quite a while.
And would you invest in Tesla?
No.
Okay. Let's switch over and talk about bond yields and interest rates, because that's a crazy subject right now.
It is a crazy subject.
And
it is really crazy.
Yeah. So what is your thinking on that?
I don't know. I have never been able to predict interest rates, and I've never tried. I don't. Charlie and I, we believe in trying to function on or to focus on what's knowable and important. Now, interest rates are important, but we don't think they're knowable. And there are some things that are, this gets back to, something, who was it, Don Rumsfeld or something?
Known knowns and unknown
yeah, and all
unknowns
that.
and unknown unknowns.
The question is the box that says knowns and important, knowable and important, is there anything in that box? And can you tell what's in that box and what isn't in that box? And it's what I call knowing your circle of competence. And my circle of competence doesn't include the ability to predict interest rates a day from now or a year from now or 5 years from now. So I say, can I function without knowing that? It's the same way as predicting what business is going to do or the stock market is going to do. I can't do any of those things. But that doesn't mean that I can't do well investing over time.
I mean, but things have changed. They're different now because rates are so low. You
It's
have negative
unbelievable.
rates.
It's unbelievable.
And then you were talking about Edgar Lawrence Smith
Yeah.
and his discovery about bonds versus retained earnings. And then I think you were saying that it makes, for as far as central banks, it makes no sense to lend at 1.4% and then to have 2% inflation.
Well, it doesn't make sense for you to buy bonds
Yeah.
if somebody is telling you that they're going to try and destroy the unit in which the bond the promise is included. They're going to try to destroy 2% of that a year.
Right.
And for you to now receive maybe 0.5% and pay taxes on it.
Right. I mean, so where do you think these low super rates are going to go and negative rates? I mean, just what are the implications on?
Well, I would say that's the most important question in the world, and I don't know the answer. No, if we knew the answer, it wouldn't be the most important question.
Ooh, I like that.
Yeah.
I mean, I don't like that, but
no, but it's true.
Yeah, yeah. Well, so let me ask this way then: what has investing in equities changed given the interest rate environment? It makes equities look super cheap.
Yeah, no, it reduces the hurdle rate.
Right.
That's why they like to decrease it, is that it pushes asset values higher, because obviously, if you promised to pay me something at 3% a year, that would have been a terrible instrument for me to own, almost any time in history. But today, if you're good for it, it's fabulous.
Right. I mean, did negative rates scare you, Warren?
They puzzle me, but they don't scare me.
Okay, fair enough. I want to switch over to Apple, one of your biggest holdings. Does the amount of shareholder interest in this company concern you or Todd or Ted? In other words, the market capitalization basically relative to the S&P 500. Is that something you look at?
Well, you look at everything and relate one to another. I mean, that's the nature of markets. So you're always trying to think about, A, what's in my circle of competence, and then what makes the most sense that's within that circle. But the important thing is to know where the perimeter of the circle is. I mean, that's way more important than how big the circle is or a whole bunch of other factors. So I think Apple is within my circle of competence. I think it's an incredible business run by a fellow that's one of the great managers of all time, and he was underrated for a while, but now he's being seen for what he really is. It's an astounding. You could almost, if we had a card table here, well, yeah, we could put all their products on one table. Can you imagine that?
Yeah.
I mean, and just think of basically the utility of those products to a ecosystem that is demographically terrific and finds that instrument useful in dozens and dozens of times a day. It's almost indispensable. not only to individuals, business, I mean everything.
And you have one of these babies now, right?
I've got one of them. I don't have it on me because I
Okay.
would be afraid it would ring and I wouldn't know what to do.
It's okay. You can take a call during this. We wouldn't have a problem with that. And what sort of apps do you have? Do you have any apps loaded?
Well, they've got a lot of apps on it, but the other day, actually yesterday, I was someplace. Normally I don't carry it in town. I carry it out of town, but somehow I was having a little trouble just getting to the. But this is only me. Any 2-year-old could do this, but I was having a little trouble getting to the part where I actually phone somebody. I use it as a phone.
Right. So you're not.
But I got a lot of apps on it.
Have you used any of the apps?
No.
No gaming apps or.
No, people have shown them to me occasionally. There's even some app with me involved on this newspaper boy tossing thing. It's the app that I revealed a year ago in the movie. I went out to California and Tim Cook very patiently spent hours trying to move me up to the level of the average 2-year-old and didn't quite make it. But I supposedly developed an app in this little movie we had, and as I walked out, I turned to Tim and I said, "By the way, what is an app?" We had a lot of fun. He is a terrific guy.
Right.
And that is an unbelievable product.
Just one more about those stocks, the so-called FANG stocks.
Yeah.
And again, does that approach a sort of bubble to you when you
No,
just
it's just
see?
the opposite. I mean, you're seeing in this kind of a market, those companies don't need capital. Well, Netflix needs capital, but basically the big companies in market value don't need capital, and that will separate them from even more from the rest of the pack. I mean, they have an incredible business model. If you look at the top 10 market value of companies, go back 10 years, 20 years, 30 years. I mean, go back years. It's AT&T, the old AT&T, and General Motors, and Standard Oil in New Jersey, as it was called then.
Yep.
And the 500 you worked on it, and but those companies needed money. I mean, when Andrew Carnegie went in the steel business, he built one steel mill, made money on that, saved it. 3 or 4 years later, he built another one, and it was capital retention and oil, business the same way, whatever it was. And now, the really incredible companies, the ones that account for just the top 5, would be well over 10% of the market value of the country. They really don't take capital that much. They may their suppliers may in some cases and all that, but they are really overwhelmingly they're capital light, and that is really different.
Then the question is, why don't you own Google and Amazon? Those two in particular. Let's take those two.
Well, that's a pretty damn good question, but I don't have a good answer. I definitely should have owned Google. The guys came to see me before they did when they were
Larry and Sergey?
Yeah, and and we were. This was a long time ago. I mean, this was before they went public, but they were talking to me about a little bit about it, and we were using search at Geico in a significant way. So I knew the power of search, and I actually used search a lot myself, starting with all the Vista or something, going way back. And search is incredibly valuable to me, and it was valuable to Geico. So I was capable of understanding that. On the other hand, I had seen that Google was taking out all the Vista to some degree, and I thought, maybe somebody else can take out Google, and maybe if they'd started earlier, somebody else could have taken out Google. So I was always a step behind on that.
What do? Do you kick yourself? What does
No,
Warren
I
Buffett
don't.
do?
Because I made so many mistakes. If I tried to kick myself, my legs would be exhausted. I mean, you don't kick yourself in the investment, and incidentally, you don't kick yourself when you make a mistake. I mean, it is part of what you do, and I was there when Ted Williams batted .406, but that means 594.
Right. And what about Amazon? Same kind of thing.
Incredible business.
But why it's not too late to buy these stocks, is it?
I don't know.
But you're not buying them right now.
No, but I don't buy much.
Mm-hmm. Right.
Those are the kind of businesses I think about a lot. Charlie thinks about them a lot. You can't help but do it. I mean, those are incredible business stories.
Right. I mean, so the door's not closed necessarily.
No.
Right.
No, not at all.
Okay.
Well, actually, one of the other fellows in the office bought a little Amazon. I mean, that showed up in our 13F.
Ted or Todd?
One of the two.
One of the two bought some Amazon? Right.
Yeah, that was in our 13F, yeah.
Right. There you go. You took the plunge.
Not
Berkshire,
me.
Berkshire took the plunge.
Berkshire. They can do anything they want to do. They can't short Berkshires. A few stocks.
And then speaking a little bit more about Amazon and Jeff Bezos, he owns the Washington Post.
Yeah.
They offered it to you, my understanding is, when it was for sale? Or, I mean, you talked
Yeah,
to Don a lot.
I talked to Don about it, sure.
And why? Do you regret not buying it, or
No,
did you not?
If I buy anything, it's got to be for Berkshire. I mean, I'm just committed that way. I'm mentally, Berkshire comes before me, and it would have been a mistake for Berkshire to own the Washington Post.
Because of the political stuff?
Yeah, sure.
Right, right.
People would think. I will guarantee you that Jeff Bezos is not telling Fred Hyatt, or anybody there, Marty Burr. But I'll bet 80% of the people, or some huge number of people, just generally think that if you own a newspaper, you tell them what to run every day. I mean, it's just it doesn't happen very often. It used to happen with some papers, obviously, and it probably does still happen with some papers, but that is not the way it generally works, and it certainly wouldn't be the way it would work at the Washington Post.
Yeah, I mean, it sounds like President Trump may think that.
Yeah, well, Kay Graham did not tell Ben Bradley what to write. I can,
Right.
that I know. I mean, I know Don Graham, but I mean, they just don't do it. But I will guarantee you that, particularly among political figures, but really the man on the street, they 90% of them probably would think that the Graham family was telling editors what to do.
I know you're reluctant to wade into politics.
Yeah.
But I want to ask you.
I may demonstrate that reluctance.
Right. Okay. Right. Good. You will in a second, I'm sure. But we've talked about this before, Warren, that the country seems to be fairly divided up, and you said it's eventually going to get back together. You still feel that way?
Oh, sure.
How will we get back together?
Well, if you could ask me the same question in the Vietnam period, and I will tell you it was even more intense. I mean, I happened to be in New York at the time, and I watched that crowd come up to Wall Street. I mean, it's coming up, whichever street that is, Broad Street. Oh, no, it would be, yeah, maybe in Wall and Broad, but whatever. I mean, I have seen
There are demonstrators.
And during the Vietnam period, I mean, people were just as inflamed, I would say, on both sides. I mean, it was, and it went on a long time, and it caused the president not to run again in the case of Johnson. So this country's we had a civil war. I mean, so we've always had. We're a democracy. We'll have strong opinions on both sides, and sometimes they rev up more than others. But I do not regard this as some unique period in history. Although I've been reading about unique periods in history ever since I was old enough to read. So
some of the things that
my dad. Listen, I grew up in a household that it was the family's belief. And it went beyond my dad and my mother, but went to all my uncles and all. I mean, that basically that the country had gone socialist, in the 30s.
Your father was a Republican congressman.
Yeah, very Republican. We didn't get dessert at dinner until we said something nasty about Roosevelt. I mean, my sisters and I, it was sort of ritualistic.
Wow. Okay. There are calls on the political left and the Democrats to tax billionaires, have a wealth tax. Would that stuff be productive and maybe close the wealth and income gap?
Well, I think I wrote something 7 or 8 years ago about the fact that there was, I was doing a little hyperbole, but there was class warfare and my class was winning. You know, basically, there's no question that capitalism, as it gets more advanced, will widen the gap between the people that have market skills, whatever that market demands, and others, unless government does something in between, which, say, the earned income tax credit or all kinds of things. And I think that's a proper function. So I would say that if people, it isn't some diabolical plot or anything, but look at it this way. If you go back to 1800 and 80% of the people were farmers, and you were the best farmer in Omaha and I was the worst, the difference in our value might be 2 to 1. You might be worth twice as much if we were out there picking corn or whatever we might be doing or planting. But now there's, we'll say, 2 million times. There's 30 million American males between 20 and 35. And if you're in the top 1/10 of 1% in basketball ability or football ability or baseball ability, you aren't worth anything. If you're in the top 100th of 1%, you're getting close. So if the payoff is huge because some guy discovered television many years ago and another guy discovered pay TV or cable and then pay TV, so that your talents, where Ted Williams got $20,000 a year for batting .406, your talents now, if you make the majors, still doesn't pay well in the minors, but if you finally get to that 1/100th of 1%, now you're worth millions. And 1/10 of 1%, you can just play sandlot ball. And so you get this pushing of extreme rewards to people who are very, very good at something the market demands. And people demand entertainment. They demand people apparently that arbitrage securities. You know, I mean, there's certain specialties, and that isn't because a bunch of people are sitting in a room deciding we're going to figure out how to take it away from the poor or anything like that. It's because of the market system. But we want the market system to keep functioning that way. But we don't want people left behind in a society where you've got $60,000 plus of GDP per capita. And that the people in the lower half have been falling behind the gains overall achieved by the country. And they aren't worse off than they were 20 years ago. They're somewhat better off, and they're better off because of things like an iPhone. I mean, you know, that's something that's terribly useful, and everybody. I get the benefits of search, you know, for nothing, you know, basically. But that's the ultimate tension: is how do you keep a system that produces incredible benefits for everybody? You know, sports is an easy example because we all like to watch them. We don't want to watch a bunch of guys like you and me play basketball. So that's where the money is.
Yeah.
But that didn't exist 200 years ago.
But then how do we address that?
We address it through things like the earned income tax credit. And we address it so that anybody that works 40 hours a week and has a couple of kids, that they don't need a second job in the family. They can have a decent life.
Does that mean increasing the minimum wage?
It means increasing the earned income tax credit,
Right,
because
yeah,
I think
right,
that's a
right.
better system.
Yeah,
What they
right.
need is more money in their pocket.
Yeah.
Now you can do more money in the pocket through a minimum wage, but you don't have as many people working.
Yeah.
You need something so they have money in their pocket.
Right.
And we can do that, and that does require in my view, it requires higher taxes on people where they were born into this world with peculiar talents that fit marvelously now, and 200 years ago, they would have been out there picking corn with me.
Can you take the higher taxes on wealthy people and put it directly to the earned income tax credit?
Well, you could.
I mean, because people complain, oh, my taxes are going
Well,
up. They're squandered.
Nobody likes taxes, obviously.
Yeah, but if you had a program where it was earmarked.
Well, that's what people do when they're on the debate stage. currently it's the Democrats, and they tell you all their new programs and how they'll pay for it, but they don't tell you how they're going to pay for the ones that are already there. Nobody's discussed the $1 trillion deficit we have. So to talk about how you're going to introduce some new, but basically, you don't want to run deficits indefinitely that increase the relationship of debt to GDP. There's some point at which that causes real problems, although we haven't seen it a lot of places that you might expect to see it. But this country has the productive capacity to let people like me live extraordinarily well, or sports stars or entertainment stars, all kinds of good managers, whatever, and still make sure that nobody is really left so that two people have to work and you have to hold two jobs and you wonder how you're going to feed your kids if you're working. $7.50 an hour doesn't do it, and $10 an hour doesn't do it, but we can do it. We have the resources to do it.
You said, shifting gears for a little bit, you said you might continue to underperform the S&P 500. You might continue.
Well, I will from time to time, for sure.
But what is the appeal then to own Berkshire Hathaway stock?
Well, I've got 99% of my money, so it appeals to me, but and it appeals to a lot of people who feel very comfortable with the fact that we'll never blow it, basically. And I think that they could feel very certain, relative to almost any company, that we won't be at the bottom quartile or something of performance, but they also should feel we're not going to be in the top decile either. We run it. If you're a shareholder of Berkshire, we are running the business like you've got 100% of your money and you're going to keep it in, and it's up to us to take care of it.
You said that my value is not so high, and it seems like you're trying to really create a Berkshire Hathaway that works well, maybe not in perpetuity, but for a very long time.
Yeah.
And then you also said we're well prepared for succession. It's almost going to be embarrassing how well.
Yeah. Well,
what does that mean?
Well, it just means that Berkshire doesn't need me, and we've got somebody that's extremely better than I am in many, many, many respects to succeed me, and that's and you want that in a company, and I want it. I mean, whatever the number may be, but it's many billions that will go for vaccines or whatever it may be, education for decades to come. That depends on that. But more important, it's really it's at least 1 million people where a disproportionate number have got something close to their whole savings in. And so we're their partner. I mean, Berkshire came out of a partnership. Charlie ran a partnership, I ran a partnership. We do look at the people as partners, and we look at a partner as somebody who trusts us to make sure that they don't get killed in the process. And they are not, if they're shooting for the top 1% of performance or 5% of important, they're not going to find it. They might have found it in our partnership back when we worked with tiny sums of money, but we can't do it. And we don't want anybody to think we can do it.
You said a person to succeed me, I think, just now. And so is that a person that we know, or is it, I mean, there are various people at the top of Berkshire that you've tapped, and there's Greg and Ajit are going to be on stage this year at the meeting?
It depends what happens to me and what happens to other people. But
it's not Justin Bieber or someone out there.
No, it isn't even Elon Musk. But the interesting thing is, if you take our top 10 holdings at Berkshire, we got $150 billion in them. Mm-hmm. I don't know who the successor is to the CEO in any one of those 10. And I've watched a lot of successors come and go in those holdings. So to think that we wouldn't have somebody able is just crazy. I mean, in our case, it's just the ultimate responsibility of the board of directors is to have the right CEO and be prepared for if something happens to that person.
Right. You said that we possess skilled and devoted top managers for whom running Berkshire is far more than simply having a high-paying or prestigious job. How do you know that?
Well, you don't know it for sure, but you've got to make judgments on that. You make judgments on a marriage. I mean, and you've got more time to look them over in selecting successor CEOs. But that's the most important decision, though, that you make. It isn't what their IQ is, and it isn't even necessarily the top, maybe in a given type of managerial skill. I mean, if they're the kind that'll leave you tomorrow, I mean, you really want somebody that is devoted to Berkshire. And incidentally, we look for the same thing in our subsidiaries. In other words, we've got a group of managers, and dozens and dozens and dozens. Now, everyone doesn't feel this way. I mean, but we've got a much higher percentage that feel that way than virtually anybody has. But you can't bat 1,000 in that game.
Another topic that people are very keen on right now is student debt. And I know that you have really prided yourself on helping students. Is this something that really concerns you?
Well, it would be a tough consideration for me if I were going to school, whether I wanted to not only invest, I'm talking about college, whether I wanted to invest the 4 years. I didn't want to go to college that much when I got out of high school. But not only the 4 years, but if I had to incur hundreds of thousands of dollars in student debt, I don't know which decision I would make. No, higher education is really expensive, and we've helped out many thousands of students, and the Gates Foundation has done the same thing, and other of the foundations that I support. But it's just expensive. It's very expensive.
Is it still worth it?
It depends on the individual. It depends on the individual more than the school. I mean, there's a lot to learn in those 4 years. I mean, there's a lot you can learn in those 4 years, and whether you do or not depends more on the individual. I don't think it makes sense for everybody to go to college. And I'm not so sure it made sense for me to go to college.
Really? Come on.
No, I'm not kidding. I don't know. I mean, I learned a lot by reading, and I spent 3 or 4 years, well, counting graduate school, 4 years. That I could have been doing other things. And there were a lot of intelligent things to do then. Who knows? I don't think it was essential. I mean, I had some wonderful people I met through it. Main thing when I went to Columbia, though, with taking Ben Graham's course, I already knew what he was going to say. I mean, I read it. I understood. I mean, he was a very good writer, but it was inspirational. It was inspirational more than it was educational.
We have a few questions from our audience at Yahoo Finance from Twitter. One is, what advice would you give to a young investor today?
Well, you've got to understand accounting. You've got to. That's got to be like a language to you, and so yeah, you have to know what you're reading. I mean, and unless you know that language, and some people have more aptitude for that than others. And that's one thing I learned by myself. Now, I took courses in it afterwards, for example, but I learned it myself in it largely. So you have to do that, and you have to have the attitude that you're buying part of a business, and not that you're buying something that wiggles around on a chart or that has resistance zones or 200-day moving averages, or that you buy puts or calls on or anything like that. You're buying part of a business. And if you buy intelligently into a business, you're going to make money. And then you have to buy something that, in my view, which you do if you're buying a business, that you're not going to get a quote on for 5 years, that they're going to close the stock exchange tomorrow for 5 years, and that you'll be happy owning it as a business. If you owned Coca-Cola, it didn't really make any difference in 1920. When I went public, the important thing was what I was doing with customers. And you probably would have been better off if there wasn't any market in it for 30 or 40 years, because then you wouldn't have gotten tempted to sell it. And you'd just watch the business, and you'd watch it grow, and you'd feel happy. So the proper attitude toward investing is much more important than any technical skills.
Another question from one of our audience members. With all your success, what keeps you and Charlie going?
We have so much fun. I just talked to him the other day for an hour, and we have fun every time we talk. And we are doing what we love to do with people we love every day. And I've been lucky on health. God knows, how Charlie in '96 and me at '89 with our habits and everything. It's I don't know what it's a testament to. I think actually being happy in what you're doing makes a huge difference. And you don't want to go around having grudges against people. And I mean, all these things that cause you to think negatively, whether it's about the world or about individuals or about your own bad luck or anything of the sort. Just forget it, basically. I think that helps.
How do you clear that stuff out of your mind?
I don't know whether you're born to some extent that way, but you certainly see that it works, Andy. You just take the people you know, and the ones that are sour on the world gets sour on, basically. And so it's, now it's got to be tough, and certainly if you've got some major illness or something of the sort, that's just, you can have terrible luck in life, and it can seem very unfair to you, but you're going to have a better experience in life if basically you see the positive sides of things. People will see the positive things in you at that point. And if you can find some, I'd say look for the job that you would take if you didn't need a job. And if you can find that where you're actually, I don't think I've had a job. I would define work as doing something when you'd rather be doing something else. And when I sold shirts at Penny's and I was getting 75 cents an hour, I would rather have been doing something else. But since I've been certainly 24, there wasn't anything else I wanted to do. And I had everything I needed, and life was wonderful. And I tell the students that, you got to live. So you may take a job at first for some organization that you don't admire, or work for somebody you don't admire. But look for somebody you admire. Look for somebody where you're looking forward to working with them that day and doing something that you're looking forward to, that you'd do if you didn't need the money. And Charlie and I found that a long time ago.
And you're going to turn 90, in a few months?
About 5 months, yeah.
5 months.
Yeah, I'll send you a reminder.
I'll send you a present. That's what you're looking for.
Yeah, right. You get a second reminder, actually.
There you go. So looking back over these years, what are you most proud of?
I'm certainly, but I have to give all the credit to their mother, but I'm certainly proud of how my children have worked out. That's not easy, in a sense, having a name that becomes famous, or and thought of as having all kinds of money, although they don't. But all three of them are now in their 60s. In fact, you're looking at the guy whose youngest child is 61. That's and they've all lived very productive lives, and they all get along fine with each other. And I've seen a lot of rich families. It doesn't always work out that way.
And another question from the audience: if you were going to start a business today, what kind of company or what industry would you look to get into?
I'd do the same thing I've done.
Can everyone do what you do, though? Do you think that?
I'm cut out for managing money. Right. It doesn't mean, different people have different kinds of minds. I play bridge with people who can remember the hand they played 30 years ago, and watch a basketball game at the same time. But so there's all kinds of different smarts that people have, and I've been fortunate enough that mine have been in something that pays off big, and I could be, very good at something else that just as much utility to society, but it doesn't fit the market system as well.
And then just finally, what celebrities that you've talked to this year?
You?
Hardly. How do people like Katy Perry or LeBron James get in touch with you?
I'm easy to find. I am so easy to find. Yeah, I see all the mail that comes in, and I'm not a hard guy to access.
All right, so write them a letter. All right, we're going to leave it at that. Warren Buffett, Chairman and CEO of Berkshire Hathaway, thanks so much for your time.
It's been fun, thanks.
I'm Andy Serwer. You've been watching Influencers. We'll see you next time.
Warren Buffett needs little introduction. He's the godfather of modern-day investing. For nearly 50 years, Buffett has run Berkshire Hathaway, which owns over 60 companies like Geico and Dairy Queen, plus minority stakes in Apple, Coca-Cola, and many others. His $82.5 billion fortune makes him the third richest person in the world, and he's vowed to give nearly all of it away. The Oracle of Omaha is here to talk about what shaped his investment strategy and how to master today's market. I'm Andy Serwer. Welcome to a special edition of Influencers from Omaha, Nebraska. It's my pleasure to welcome Berkshire Hathaway CEO Warren Buffett. Warren, welcome.
Thanks for coming.
So let's start off and talk about the economy a little bit. And obviously, we've been on a good long run here.
A very long run.
And yet, does that surprise you? And what would be the signs that you would look for to see that things were winding down?
Well, I look at a lot of figures just in connection with our businesses. I like to get numbers, so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses, and it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses. What those numbers tell me, they're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year, and we care a lot about the price. We do not care about the next 12 months.
But are you surprised at how long this economy has been expanding?
I've been surprised by all kinds of things in the last 10 years about the economy. I mean, I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes or you read Samuelson, you read any of them, they do not get into a negative rate environment. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
All right, so you don't pay much attention to the dismal scientists then, I guess.
Well, I pay none in the sense of as a guideline to doing anything. It's entertainment. I mean, it's like going to a variety show or something like that. But and I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. And you may know he was a big shareholder of Berkshire, but it's they make guesses, and there's so many variables. I mean, in the hard sciences, you know that if an apple falls from a tree, that it isn't going to change over the centuries because of anything or political developments or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
Fair enough. You have over $100 billion of cash.
Berkshire does that.
Berkshire. No, well, I don't even see how much you got. Maybe you do. Berkshire has over $100 billion in cash, and you say that you always want this company to be a fortress. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is.
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. All kinds of things where we might have to pay out billions of dollars. And I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children were growing, the house was paid off and everything. But, I wouldn't worry too much about having a lot of cash around.
Let's talk a little bit about Apple. Everyone always wants to talk about Apple, right? It's kind of the it stock, it company. You have a $45 billion stake, more or less. How closely do you follow the company? People are concerned they haven't really introduced any new products.
Well, if you have to closely follow a company, you shouldn't own it.
Really?
No. If you buy a business, if you buy a farm, do you go up and look, every couple of weeks to see how far the corn is up, and do you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that? You buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once. It doesn't grow faster if I go and stare at it. I can't cheer for it. More effort, or something like that. And I know there's going to be some years when prices are going to be good, and some when the prices aren't going to be good. I know there's years when yields will be better than others. But about the farm, and if it just doesn't. I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to, and in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre. And now in a good year, it'd be 200. We've really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at whether it's cotton or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that.
And so Apple is kind of like a farm.
Well, it's a long-term investment, and if you own the best auto dealership in town, the best brand, and you had somebody good running it, you wouldn't drop by every day and say, how many people have come in today, or I think interest rates are going up a little, maybe it'll slow down our sales or anything. No, you buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days, and things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important.
Let's switch over to talk about buybacks, which is another hot topic these days. And you did a fair amount. If you look in the annual report, you can see that between December 13th and 24th, it looks like you guys bought back about $233 million worth of Berkshire, which was right near that particular stock market bottom. How did you know that? Or what was going through your mind?
If I knew it, I'd have bought a lot more than 200 million. No, that's not a big purchase for us, actually. And no, we will buy Berkshire when we have lots of excess cash. All the needs of the business are taken care of. We spent $14 billion on property, plant, and equipment last year, way more than depreciation. So we take care of the needs of the business. Then we have excess cash. And if we we'd love to do is find other businesses to buy. But if I think the stock, and my partner Charlie Munger think the stock is selling below intrinsic business value, we will buy in stock.
So it obviously was at that point.
Well, we thought so, yeah. But what's really intriguing is when it goes down a lot. I mean, when you're buying dollar bills for 60 or 70 cents, which periodically you get a chance to do in stocks, then assuming you've got the cash, you don't want to ever get so that that some surprise could really take you out in some way. But if we've got excess cash, we'll buy it as fast as we can.
But at that point, it would be more like a 2009 rather than just
Yeah.
December
Yeah,
of this past year.
exactly.
Right.
But it's, if you and I own a McDonald's franchise together and it's worth $1 million and you own 50% of it and you come to me and you say, I'll sell out for $400,000, I'll buy you out. If you say
If you want to
600
buy mine, I'd be wary of that, but
Yeah,
for
well,
just that reason.
You should be, yeah. But if you want 600,000,
Yeah.
I'll just say, come
right.
back tomorrow.
So just continuing about buybacks, Senator Schumer and Sanders want the government to weigh in to sort of legislate when companies can do buybacks. And then also there was a report recently about executives doing insider trading, it appears, around the times of buybacks. So are buybacks a kind of a problem?
Well, you'll have some people that misbehave in respect to any activity. I mean, it really wouldn't have much to do with buybacks. I think buybacks, the degree to which they've been part of nefarious activity, and I've observed them for a lot of years, are very close to zero. But that just may be that there aren't enough opportunities. But that article did not. I didn't follow the conclusion on it. I mean, you're distributing money to shareholders. Essentially, you can do it by dividends, and presumably American business should distribute money to its owners occasionally. And we do it through buybacks, or we've done some, and we don't do it through dividends. But most companies do it through having a dividend policy. And then if they have money beyond the needs of the business, then I think if their stock is underpriced, then it makes nothing but sense.
Should the government tell companies when to do it, or at least mandate conditions where they can?
Well, they do restrict you a little in terms of if you're some general rule of the SEC, if you're having some kind of, this isn't quite the right word, but manipulative activity or anything like that in the stock. But no, I don't think the government should decide your dividend policy. I don't even think they should direct your capital investments. They can make it enticing to make certain kinds of capital investments, which they do with renewable energy, for example. I mean, the government has interest in fostering certain developments in this country over time, and they do. There used to be a special oil depletion allowance, 50 years ago and so on. That was more politics than it was governmental policy, but certainly renewables are a prime example of that. But the idea of directing whether you are entitled to return cash to shareholders and the manner in which you do it, I don't think really makes a lot of sense.
The 2020 election is going to be upon us before we know it. And I know that you had some nice things to say about Mike Bloomberg, but it appears he is not going to be running now.
Yeah, it's hard to win with just a billionaire vote.
You would have your vote and a few others. That's funny.
But I admire him enormously. I wish he had run. I want to be very clear on that.
President Trump was a business executive. So 2 questions. Is a business executive the right kind of person to be president? And what characteristics do you look for a president that you would support?
Well, I think a business executive can be the right person, but I don't think that because they're a business executive that you give them extra points. And number one, I want a president that wakes up every morning and realizes that the greatest threat to a country which has got all kinds of things going for it are weapons of mass destruction, and that we live in a world where people, organizations, and occasionally countries could have people that would like to wipe out a large percentage of the American people, or maybe other countries as well, and that you now have capabilities, which I always thought until recently I classified as nuclear, chemical, and biological, but I think you have to add cyber now. If you have some evil genius someplace that for crazy reasons, just like happened with anthrax back, who knows what motivates somebody that starts sending anthrax out in my letters. And if you have somebody that thinks that it'd be great to send a false alarm to the Russians and to the U.S. that the other side was launching or something of the sort, it's a very, very dangerous world. It's a wonderful world, but it has dangers now that started in August of 1945, and when Einstein said this changes everything in the world except how men think. So I want a president that has that same filter, that all of these other things are important, but protecting the country and reducing the chance of successful use of weapons of mass destruction against us is the number one job. And I think most of the presidents, I've talked to a couple of them about it over the years, and I really think that they do realize that they may get lost in the events of every day as they go along. And then beyond that, I want a president that has two objectives with the economy. One is to make sure that this marvelous goose we have keeps laying more golden eggs. And then I want a president that also feels that if GDP is $60,000 per capita in the United States, that nobody should get left behind. We've got a market system that works marvelously in turning out more goods and services, better ones, year after year. Done it all through my life.
Would you ever talk to a candidate and say, hey, what do you think about these three things?
Well, they'll tell me what I want to hear in most cases. So I want to hear what they tell people who disagree with them on the subject. I always like to ask a candidate, they usually finesse me some way or another, but I say, what are you for that the majority of your followers are against? I know you really believe in that, and that's really the test, but I'm not sure that, except under some kind of sodium pentothal or something, you're going to get a great answer to that question.
That's great, but that's the question you ask the presidential candidates or presidents that you would speak to.
If I really want to get, and that's why Bernie Sanders was so successful. I mean, 90% of the people who voted for Bernie Sanders had probably not heard of him 2 years earlier, but they felt they knew exactly what he would do. I mean, they felt he was authentic. And if you asked him, what he was for that most people might be against, he would tell you,
A few questions about Kraft Heinz. Was that a mistake?
Well, we'll find out over time. But we did pay too much, in my view, for Kraft. We didn't pay too much for Heinz. So when we started out, it was originally a non-public partnership between us, but we did pay too much, in my view, for Kraft. And there's not much you can do about things if you pay too much. Secondly, there's always been a struggle between the retailer and brands. I mean, if I've got a terribly weak brand and I want to get into Walmart, I'm not going to be able to do it. I mean, I have to offer all kinds of crazy concessions, and I want to be in Walmart if I have some sort of consumer packaged goods. The negotiation is way different if you have something essential versus non-essential. 10 years ago, Costco tried to get rid of Coca-Cola. Costco's got terrific loyalty among customers, and their own Kirkland brand is a $39 billion brand now, and it moves from category to category, and they only started in 1992. So they know brands, but in the end, they put Coca-Cola back in. If it had been Royal Crown Cola, they wouldn't have had to put it back in. So there's always that struggle between the brands. I mean, and there always will be. But the retailers net, it has been moving in their direction, particularly, I think, because of the Amazon revolution.
First Walmart, and then
Walmart.
Right, and then
Walmart,
Amazon.
yeah. I mean, but it's been accentuated. Yeah. I think we have a new retailing environment now. I mean, it isn't like it goes from night to day, but it moves somewhat, and brands that people have spent billions of dollars developing and sponsoring TV shows or sponsoring radio shows in the old days. I mean, Campbell's Soup was always on there with Jack Benny or something, when I was a kid, and it was big. And it built brands, and people obviously like the product too. But people are more willing to change, and it's harder. It's a somewhat different world than what. It is night and day. I mean, you are very unlikely to keep changing brands every day. But it really surprised me that Gillette lost position. I mean, men don't like to experiment much. Women are better experimenting. But when you were a kid, the Gillette cavalcade of sports was your pal, and brought you the Rose Bowl and the World Series and all that sort of thing. You didn't. You just shaved with Gillette the rest of your life, and you still do to a great degree. But it's not exactly the same as it was even 5 years ago or so when we bought Kraft.
You mentioned Amazon as a game changer, and I have to ask you, you haven't bought the stock. You're an admirer of Jeff Bezos. A listing of the richest people in America came out. He's number one. I think your friend Bill Gates is number two. You're number three. So you can see what he's done in myriad ways.
Yeah.
And of course, the question is, how come you haven't bought Amazon? Is there still time to buy it? Would you still buy it?
Oh, I always admired Jeff. I mean, I met him 20 years ago or so, and I thought he was something special, but I didn't realize you could go from books to what's happened there. No, I mean, he had a vision and executed in an incredible way, something that it would not have, but there's a lot of games I miss. I would have missed, I would have missed Microsoft even if I gotten to know Bill earlier or something. Those just aren't my games. I don't worry about the things that I miss that are outside my circle of competence of evaluating. I have missed things that were within my circle, and that's a terrible mistake. Those are my biggest mistakes. You haven't seen them. But I don't, it's not a mistake because I miss Netscape or something like that at all. I would say that maybe 5% of the companies or 10% of the companies at most are within an area of my circle of competence. There's something I should be able to understand.
All right, well, let me switch gears then and ask you about leverage a little bit. And corporate debt, people are concerned about. People are concerned about federal debt at $22 trillion. Should we reduce, let's just say, the federal debt, and how would we do that?
Well, if you're running a deficit getting close to 5% when things are really good, that's a new world. And neither the Republicans or Democrats are particularly concerned about it. And we're not having a lot of inflation. That wasn't supposed to happen, but it's happening. That's why I say you don't want to get hung up on trying to make economic analysis because nobody's any good at it. You don't get rich doing that. If you look at, you mentioned that Forbes list, if you get on the list, the number of people have done that by economic analysis, I think you're just about zilch on there.
Okay, fair enough. Income inequality, wealth inequality, you've talked about the earned income tax credit. Is there more to it than that? Should we adjust tax policy? It seems to be going the other way right now.
Well, it is going the other way, but I think the earned income tax credit is the best way to put money in the pockets of people that don't fit well into the market system, but that are perfectly decent citizens and that have made a good bit of the success somebody like I've had with Berkshire or something possible. It wouldn't have happened without the America we have. And if you go back 200 years and we're all working on, 80% of us are working on farms. The person that's the best at that, working on that farm, whatever it may be, is worth maybe twice the ones that's the worst. I mean, that's the difference between super talent and no talent in the farm economy, picking cotton or whatever it may be. Now, if you're the best middleweight fighter in the world, you may get $20 or $30 million. And if you are just a good citizen, raise nice kids, help in the neighborhood and everything else, but you don't have market-related skills, you'd be good on that farm still. And you would be earning something comparable to most of the people around you. But you don't have something now that as it gets more and more specialized, and it's going to continue to get more specialized. You want two things for that person. You want them to have a decent life. I mean, they live in a country with 60,000 of GDP per person. You want them to have a decent life, and they can. I also think you want them to have a feeling of accomplishment. So you want them to have a job, assuming that they're not handicapped in some way. You want them to have a job. But the minimum wage would be one way to say, well, we'll make sure that they have enough money in their pocket. But that's got a lot of effects in disturbing the market system. They just need more cash. They don't need a higher wage. They need more cash in their pocket. And the government, at a relatively low cost, can provide a decent living for anybody that's working 40 hours a week and has a couple of children. And we've gone in that direction, and it's sort of bipartisan. I mean, you find both Republicans and Democrats for it. I think it would be better not to have one annual payment, you know, that they get it monthly. And I think there's various things you could do, but you want them to feel part of the system, and you want to have them get as more and more of these golden eggs are laid. You want them to get a little more of their share.
I mean, if we don't do that and the Democrats win, it's possible we get, you know, big taxes on wealthy people, free college for all, and those are bigger plans.
You want more money in the pockets of everybody that's willing to work or is unable to work. And we can do it. A rich family would do that. You know, if I had 6 or 7 kids and I had some business I wanted to pass on, you know, you'd pick the most able person to run it because that's the market system to do that. But you'd make sure that all 7 of the family participated. You'd give more to the one that didn't. You might give more to the one that kept producing the golden eggs. You would, but you wouldn't just say to the the one at the lowest end, who might be the best kid of all in most respects. You know, he's the one that shares with everybody and does all kinds of things. You know, and you wouldn't say to that him or her that, you know, too bad, but that's just the way the market system works. You know, that, go have your spouse get a job and, you know, and look for housing someplace.
Right. Why don't we do an update about the healthcare initiative, which now the company has a name.
Yeah,
Haven. Was that your idea?
No.
Sometimes
I didn't worry about a name. We could have gone on as a no-name operation for 10 years, as far as I'm concerned. No, that is. We got a wonderful partnership in the sense that it's large and has reasonable market muscle with more than 1 million employees among the 3 of us. We've got 3 CEOs that can make things get done in organizations that are so big that normally they would get very bureaucratic. You know, I mean, you know, if you try to do this with many big companies, you'd have legal weighing in, and you know, and public relations weighing in. We don't have any of that stuff. They may have them in certain areas, but I don't have to. But Jamie isn't going to worry about doing that sort of thing, and neither is Jeff. So we've got a unity of commitment and an ability to execute on the commitment. The only problem is, you know, you've got a $3.4 trillion industry, which is as much as the federal government raises every year. That basically feels pretty good about the system. As we went around talking to people to find a leader for the group, for example, you know, everybody says, you know, the system, you know, it turns out very good medicine, but you can't go from 5% of GDP to 18, you know, without really making you less competitive, among other things in the world. So everybody thought the system needed some adjustment, just not their part of the system, and that's very human. I do the same thing, I'm sure, if I was in the same place. So there's an enormous resistance to change, while a similar acknowledgement that change will be needed. And of course, if the private sector doesn't supply that over a period of time, you know, people will say then, you know, we give up, we got to turn this over to government, which will probably be even worse.
How often do you talk to Jamie and Jeff about it? I know Todd Combs, I think, is your point person.
Todd really does all the work at our, but if this works, give Todd 100% of the credit from the Berkshire standpoint.
Does Haven have to buy companies to gain expertise? And what do you?
No, no, I don't.
What is the plan? I mean, how do you?
The plan is to support a very, very, very good thinker on this subject is a practicing physician and who commands the respect of the medical community to, in effect, figure out some way so that we can deliver even better care and have people feel better about their care too. I mean, they have to perceive that they're receiving better care over time and stop the march upward of cost relative to the country's output. We've got this incredible economic machine, but we shouldn't be spending 18% when other countries are doing something pretty comparable in terms of doctors per capita, hospital beds per capita, and all that. the very top stuff in medicine, I think, is very much concentrated in this country, and that's great. I want us to be the leader, but I just don't. I think we're paying a price. If we're paying 7 extra points of GDP, that's 1.4 trillion a year.
Is the administration focusing on drug prices? Is that sort of a rabbit hole? Is that missing the bigger picture?
I mean, they're trying, and Congress generally. I mean, if you talk to the average congressman, they regard it as a problem, and they see specific instances, of drug prices or something like that. But it's a big problem to change. I mean, the trouble is it intersects in so many ways, and that's why we've got Gawande heading it, and we've got 3 good-sized organizations backing him. We're not trying to do it to make money. I mean, that is not a goal that we end up with some business that we make money off of.
And will he be talking to health insurers, for instance?
Well, he'll be talking to everybody, but it is his game plan is not something we're going to try and lay out because it's in his head to some degree. I mean, obviously we selected him by hearing and reading and so on what he's done, but he'll learn as we go. We will conduct certain experiments, or he will, and try out a community where one of us has a lot of employees, maybe, and there's various ways to experiment.
Shifting gears, where do you find things like that Abe Lincoln tail and leg quotes? I mean, do you read Bartlett's book of quotations?
No, I
and
don't
find
read,
these things?
but probably 50 years ago, I looked at a few Bartlett's quotations, but I read a lot, and
you just remember these things and apply them?
Well, if you're 88 years old, I mean, you ought to remember something. Oh, you don't remember what happened yesterday, but you remember the old stuff. You've got a lot of interesting quotations in your head,
Yeah, not like you do. I think that's great. Okay, so one company you invested in was GE.
Yeah.
And you did well with that investment. And
yeah, I was too early, actually. If you look back, I was very active in the last half of September and early October, and then I wrote that article in later October. And I knew it was going to get bad. I wrote in the article it was going to get bad, but I didn't think the stock market would react as much as it did between then and March. So I had more or less used up our powder well before the bottom was hit.
that's interesting. How have you avoided not getting back into GE more recently? I mean, I'm sure that they've reached out to you. Everyone says, oh, why doesn't Warren Buffett invest in GE and save it and take it to the promised land? It's this great American company.
Well, actually, I think Larry actually is doing a good job.
Larry Culp.
Danaher, yeah, Larry Culp, but Danaher is a good sale, and I think his priorities are straight, and I think he's a very able guy, and he's on the right track. And I'm a fan of GE's in the sense that we're a big buyer from them, we're a big seller to them. I've known the managers, I mean, Jack Welch is a very good friend of mine, and we don't agree on politics 100%, but we have a lot of fun together, and I love the guy. So I've got a great desire for GE to do well. It just hasn't looked that attractive to me.
Right. You talked about the groves of trees in the letters shareholder. One was the third grove, which was sort of the in-between stakes.
The equity interests.
Yeah, is it the case that those are sort of not the healthiest grove of trees? And why would that be?
No, those Pilot Flying J is very, they're companies that under GAAP accounting, we have to record under an equity method. We own more than 20%, but we don't control them. And so it's treated under GAAP accounting as a special category, and it didn't fit well in the other grove, so I had to make it a separate grove by itself. It's not that significant a grove.
You say that the sum of Berkshire has a greater valuation than the parts.
That is true.
Did you ever try to calculate that? How much is that?
Well, it depends on circumstances. I mean, there's sometimes when the float from insurance can be very valuable. There's sometimes when the ability to use production tax credits, we'll say, in the utility business, but have them on as part of our consolidated return helps. But that varies a lot. But it is a plus. We can move capital. Well, take a business like See's Candy, which we bought 40-odd years ago. It's a wonderful little business. it throws off capital. We've tried 50 different ways to expand geographically, do all kinds of things. It doesn't work. And we'll try it again and it won't work. But we can move that capital to help buy BNSF Railroad or do all kinds of other things. So we've got a seamless and tax efficient way of moving capital where it's needed. And we've got some companies that really chew up capital, and we got others that kick it off, and we can move it from one pot. If you try to do that with your investments, you incur some taxes as you go along doing it, and it's less efficient than what we've got.
You talked a lot about the tax cuts and the benefits to Berkshire. You didn't really get into the costs of the tax cut, which surprised me a little bit. What are there costs? I mean, is it just free money?
Well, it makes a difference. The tax cut we get, for example, our utilities, as I mentioned in the report, that goes to the customers. That's just the nature of utility regulation. But net, we were a significant beneficiary from the tax cut. I mean, basically, let's just say we had one class of stock. We got two, but stock. You and I own a business together, and we think we own all the stock. But the truth is, before the tax cut, the government had a 35% share of the stock on income. Now, it didn't have a share of the assets, but it had a share of the income. And if it wanted to change it to 40, it could have changed it, but fortunately it changed it to 21. And if we had a private business, if we had a McDonald's franchise together or an auto dealership together, the third shareholder, that invisible shareholder, the government, just handed us back a bunch of the shares of stock, and our shareholders benefited, and a lot of other shareholders benefited.
Right. You talked about Ajit Jain and Greg Abel saying that Berkshire blood flows through their veins. Have they made a difference since they become vice chairs? And then are they like Warren and Charlie?
No, they don't have the interaction. They each run a separate business. Ajit does not think about the other businesses. He thinks about the insurance business, and Greg does not think about the insurance business at all. And I think about the money and the capital and so on. But they're running two very big businesses. I mean, Ajit's business, has, you get all told, at least a couple $100 billion of assets, and Greg's business has $150 billion of revenues. I mean, they both would fit up there toward the top 10, or so in the country in terms of value. So maybe the top 15. But they're very big businesses.
But they're not exactly like you two guys. It's not.
Oh, no. Right. Charlie and I have a partnership thinking about the whole place, and we've done it forever, and we still do.
And Todd and Ted? I didn't see them mentioned.
Well, they have $13 billion each, including pension funds our pension funds that they run, and so of the 173 billion we had at year end in equities, we had 173 bucks. We had another 8 billion in pension funds. So of the 180 or so, they had 26 between them that they're managing. They got total discretion on that. They don't ask me. At the month end, I look and see what they did. They don't do much. They don't do a lot of trading or anything. But I look to see what changes they made. And Todd, for example, I mean, he made a couple of small investments in private placement type operations, and I know what the businesses do, but I can't tell you their names. That's his baby.
Was one of those, you made this investment in Oracle and then you sold it. Was that something they did?
No, that was not something they did. That was something I did.
Yeah, and you said you didn't understand it. That's why you sold it. But then why'd you get it in the first place?
Yeah, well, that's a good question to which I do not have a good answer. I know. I see development. I know enough about the cloud to know I don't know enough about the cloud.
Right. Okay. So Barclays put out a note. They said they were lowering the estimates for Berkshire for the EPS. Do you read that stuff?
No. Well, I may read it accidentally, but I don't seek it out to read. I'll put it that way. But it just doesn't make any difference. I mean, if I spent time reading that, I wouldn't have time to read 10Ks. And we're not going to do anything different. I don't know what we're going to earn. As I put in the annual report, and I really think this is unique, I mean, we do not prepare financial statements monthly for Berkshire. And there's just no other company would do it, but there's no sense doing it. I know where the money is, and I know how the companies are doing generally, but what difference does it make? Because I'm not going to try and hit any number for the quarter by, having a sale on insurance or doing something even worse. So and Charlie, I mean, he knows where we stand, and we know what businesses are doing well, which aren't, and we certainly know where the money is.
Another one, UBS survey of Berkshire investors says the 5 most important things to them are succession, investment performance, M&A opportunities, share repurchase, insurance margins. Do you read that, or does that
No,
surprise
but
you?
I don't disagree with that. I mean, I'm glad that somebody understands this.
Your own investors.
Yeah. Well, that's important. 54, well, if you go back to when I started my partnership in 1956 that Berkshire came out of, there were 7 people sitting there at a table having dinner, relatives primarily, and I said, here's the partnership agreement. It's done under Nebraska law. It's 4 or 5 pages. You don't need to read it. But I said, here's a little half-page, what I call the ground rules, and I want you to read these, and if you feel okay about that, about the interaction, what the expectations are, and all of that sort of thing, then we'll join forces. And if you don't, it's fine. Other people have, but we shouldn't be partners. I mean, if I'm going to have a partnership with somebody, I want it to be compatible. It is, and when you have a public company, you can't control who comes in. I can't control some guy that comes in and thinks we're going to pay big dividends or split the stock or something like that. So by my actions and my communications and everything, I want to attract the people that, from the public market, that I want, and I want to keep the others away. Costco was built. Saul Price, who started the Price Club, that thing, he sat down and figured out the customer he didn't want. And he set up a system that would keep away the customer he didn't want. Who did he not want? He didn't want somebody buying a quart of milk with somebody behind him with a basket of $200 worth of goods waiting for that. So he put in a membership fee, and by putting in a membership fee, he killed all the drop-in business, the business that belonged to the 7-Eleven. We want Berkshire to keep out people who have expectations about us that are different than ours. I mean, good for them, and I hope they find somebody they fit. But if you're going to run a church, you want your seats to be filled by people that are generally want to listen to your form of religion, and you don't want it to change every week and say, gee, I need a new group, and I'll go out and talk to a bunch of investors and get them to come to my church this Sunday, because there's only so many seats in the church. There's 1,645,000 or so A equivalent shares, and those are the seats, and I want them occupied by people that are on the same page I am.
The Church of Berkshire. Seems like you've got a big weighting in financials, and of course you finally invested in Jamie Dimon's company. Why banks right now?
They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money, and I feel there's a very high probability I'm right. And I don't think they'll turn out to be the best investments at all of the whole panoply of things you could do, but I'm pretty sure that they won't disappoint me.
Is climate change changing your insurance businesses?
No, it doesn't change the insurance business.
Does it change modeling or something in the business?
No, it would change our insurance business if we were writing 20-year policies. I mean, if there was something that changed life mortality adversely to the interests of the life insurance company, you're stuck with a policy for 20 years if you write the life insurance policy, and you'll keep paying your premiums if it's adverse to me. That's what's happened in long-term care insurance, for example. But when you write a policy for 1 year at a time, you see what the developments are, and if cars, for example, are much safer to drive than they used to be. There used to be 15 deaths per 100 million miles driven. Now there's a little over 1. On the other hand, they've become much more expensive to fix. I mean, that little side view mirror, which used to cost $10, now $1,000 or something like that. So you have things that are changing in terms of, if you're writing collision insurance, you got to allow for the fact that windshield the bumper, all kinds of things, or the side view mirror and all that are way more expensive. But if you're writing liability, you know that people aren't going to die as often. So climate change is like climate's been changing, but the truth is that you now can buy really big catastrophe limits cheaper than you could buy them in 2005 or thereabouts, allowing for changes in the dollar and concentration of population. So far, rates have come down. That's the reason we've gotten out of the cat business to a great degree. We were a very big writer of cat business 10 or 12 years ago. We aren't out of the cat business because of climate change. We're out because the prices aren't right. And the world will change, and that's got very serious consequences, but it won't change that much from year to year. That, you know, we've done very well during a period of some climate change.
You've talked about technology advancing faster than our ability to understand it. And I'm wondering if social media and Facebook and Google and Russian trolls coming in, and is that maybe an example of that? Or are you still worried about that problem?
Well, I think cyber poses real risks to humanity, forgetting about the problem of even misinformation. I'm just thinking of, you know, we have railroads running over 22,000 miles of track, and some of them are carrying ammonia, and some of them are carrying, you know, chlorine and things. We have to carry them. We have no choice about that. We're required by law to carry them. And you know, I would rather do that in a non-cyber world than a cyber world. And there are all kinds of things. The problem about something like cyber is that it's moving, and it's just unpredictable whether you'll get some crazy guy like stuck the anthrax in the, you know, what they can do becomes magnified. I mean, when you saw what, you know, 19 guys did, you know, on 9/11, I mean, tools in the hands, or potentially in the hands, of either crazy individuals, crazy groups, or even a few crazy governments, you know, are really something. And we don't necessarily know what all the tools they have are, and that is moving all the time. I mean, you know, again, Einstein said, he said, "I know not with what weapons World War III will be fought, but World War IV will be fought with sticks and stones." You know, I mean, it's a dangerous world.
I don't know if you've been following this, Warren, but what do you think of Elon Musk's behavior as a CEO?
Well, I think it has room for improvement. Now, he and he would say the same thing. You know, I mean, it's just some people have a talent for interesting quotes, and others have a little bit more of a blocker up there that says this can get me in a problem. And but he's a remarkable guy. But I just don't see the necessity to communicate. You know, I think I've got 7 tweets because a friend of mine signed me up for it, and she's called me about 100 times saying, "Can I tweet this or that?" And I've said yes to her 7 times, I guess, or something like that. I've never actually written one myself. I don't even know how to do it.
Have you talked to Elon ever?
He joined the Giving Pledge, so once or twice, but that's a lot of years ago. You know, 7 or 8 years ago. He hasn't come to our annual gathering, so I haven't seen him for 7 or 8 years.
So let's talk about this trade war that's been going on a little bit with China. And I guess I'd like to ask you, do you think that Donald Trump was right in calling out the Chinese government and basically putting them on notice?
I won't have any comment on that. In terms of political activity, I don't put my citizenship in a blind trust. So when the election comes around, I'll do something. On the other hand, people will interpret things I say about any president, you know, as to some extent coming from Berkshire, and they don't come from Berkshire. You know, I'm just an individual. So I think I'm glad to talk about China, but I can't talk to you about that part of it.
Fair enough. I mean, do you think there was room for improvement then in terms of the trade relationship between China and the United States?
Well, I think that China and the United States absolutely are destined to be the superpowers, beyond my great-grandchildren lives, and will always be competitors, and will be competitors in business, we'll be competitors in ideas, all kinds of ways. And there's no other way it would be. And we just have to make sure that competition doesn't get us to a point where we don't realize that the best world is one in which both the United States and China prosper. I mean, we do not want to have an island of prosperity in the rest of the world, envious of us in a nuclear age. And China doesn't, Russia doesn't. I mean, we all recognize the dangers of letting competition get out of control and become, you can be competitors without being enemies. And that's what all powerful nations have to realize over time. I mean, it's different than 200 years ago when you could have some dominant country, and then they may have done some things that you didn't like, but it didn't threaten the existence of the world. You really threaten the existence of the world as we know it if important countries do not constantly recognize that they can compete, they can fight over certain things, but they can't regard it as essentially the equivalent of war.
Here's a question from Kevin Chen, who is a Berkshire shareholder and an NYU professor. And he says, and this is sort of along the lines of what you were just saying, Warren, but do you think that U.S. and China will be able to resolve their differences, or are conflicts unavoidable?
Well, I don't think conflicts are unavoidable, but I think it has to be active thinking on the part of every hugely powerful country. And Russia is hugely powerful. I mean, 90% of the nuclear arms in the world are between U.S. and Russia. So they have to recognize that the best world for them is one where they don't try and grab all the apples, basically. And we have to recognize that. And we can't, in the United States, we can't think that either our ideas run the world, or we start getting aggressive about things, and China can't think that, and Russia can't think that. And that's obvious. You just have to make things, you got to be sure things don't escalate. You have World War I, with an archduke, I mean, you get these, you can get chance incidents, and you really want to, I asked one of the presidents one time, in terms of what he would do if he awakened in the middle of the night with somebody coming to him and saying, absolutely, somebody else has launched, and would you launch on that? And you've got 10 minutes to decide. And I wouldn't want to have that responsibility, but you want to make sure you don't get to that point.
Right, right. Would you ever make a big acquisition in China? And if not, aren't you missing a huge portion of the world?
Yeah, the answer is we would. Yeah, we would.
Have you looked?
We've been made aware of some things, yeah.
Are you concerned, on the flip side of the coin, are you concerned that the rule of law is different, that the accounting might be opaque?
Well, I'd want to be sure I understood the accounting, obviously. Some businesses that'd be easier to do than others. But I know the laws, the customs, the accounting, the people better in the United States than any place else. So there's some small hurdle in many countries to get over, which I can get over. I mean, but I just don't. It's just not as easy as looking at something where I already know the answer, from previous transactions or something of the sort. So it's easier to make a big acquisition in the United States. I have to do more work if I'm looking beyond the borders. But I love the idea of doing it. When we made the acquisition in Israel a dozen years ago, I didn't know what the tax rates were there. I didn't know what corporate law. I suspected that it would all be answered satisfactorily, which it was, but I didn't just automatically know it.
It seems like you're more open about doing a deal in China than in previous conversations.
I don't think so. No,
It's out there.
I'm open. Yeah,
Right.
we made 2 decent-sized stock acquisitions there, and they worked out fine.
Those are?
Well, PetroChina and BYD.
BYD, yes.
Yeah, BYD was Charlie's, but
Right.
Charlie's
Yeah.
very well versed on China.
Right.
But,
The U.S. trade deficit has been widening, and of course, a lot of that has to do with our trade with China. Is that something that worries you?
well, I wrote an article about it for Fortune and the trade situation many years ago, and when our deficit got to be large in relation to GDP. I don't think it's essential to have a trade balance, but I think that if a trade deficit gets large and it looks like you have no way out from it, that can be a real problem over time. I mean, you're shipping little pieces of paper to the rest of the world, and they're shipping you goods. I mean, people are working, making underwear or shoes someplace, and they get little pieces of paper from us. And it gets very tempting if you've done that enough to make sure that those little pieces of paper aren't worth very much over time when they want to cash them for something. So you don't want to have, we don't have any problem running trade deficits, but if we ran really large ones and we sort of worked ourselves into a box where we didn't really have a solution to get the numbers down, it could be a problem. And I wrote about it one time, but it's kind of a nice thing, actually. I mean, wouldn't you like to have something where you just send out little pieces of paper and somebody keep supplying you with your food or your, whatever.
I'm living it.
Right? Yeah, right, exactly. Yeah, we call them credit cards in the United States.
Exactly, yes. Okay, and last question. China is facing its slowest growth in nearly 3 decades. The leadership there lowered the targets, I think, to around 6.5%, 6%. Are you concerned about this slowing growth and the impact on global markets?
Well, I don't worry about it in terms of global markets. I mean, China's going to grow a lot over time. I mean, when you think of what's happened, since 1949 or whatever, but there's been nothing really like it. I mean, you had 20% of the world's population at that time, perhaps, really hadn't remotely achieve their potential. I mean, they had the intellectual capacity, they had a decent soil, all kinds of things. I mean, and what's happened there almost is beyond belief. And that game's not over, but we've had incredible developments in the United States. I mean, real GDP per capita is 6 times what it was the day I was born in the United States. 6 times. And we thought we were a pretty developed country then and everything. No, my parents wouldn't have believed it. I mean, they would have thought, that this kid has really got it made. Make more in the United States, and it was true. I mean, we had this tailwind, and China's had a hurricane behind it, in recent decades.
In a good way.
Absolutely.
Because you were comparing it to the tailwind of the hurricane at your back.
At their back, and they have found a way of life that is dramatically different than existed for the billion. There was a billion then, maybe a billion, 2 or 3, whatever it is now, and they have changed a country really of size. I don't think there's ever been anything like it. We've done it too, but it took somewhat longer. I mean, it was more stretched out. It was a remarkable period, but when you go to, I first went there in 1995, and then they regarded it as a miracle, and then I went back 10 years later, and it was a whole different country beyond that.
Warren Buffett, thanks so much for joining us. I'm Andy Serwer. You've been watching Influencers. We'll see you next time.
A business empire needs decisive leadership, but also a steady hand. For over 40 years, Charlie Munger has been the latter for Berkshire Hathaway. As Berkshire's vice chairman, the 95-year-old Munger is Warren Buffett's right-hand man. He's also an investing legend in his own right. Munger ran a firm in the 1960s and 70s that scored returns of over 24% per year.
He's here to talk about how to make investment decisions and life choices that help secure prosperity and longevity. I'm Andy Serwer. Welcome to Influencers, and welcome to our guest, Vice Chairman of Berkshire Hathaway, Charlie Munger. Charlie, nice to see you.
Delighted to be here.
So you just had the annual meeting, and I have to ask you what your favorite moments of that were.
What I like is that both the shareholders and the employees of Berkshire are so extremely enthusiastic. And it's not just that they've made a lot of money and have nice careers. They think they're on the right side.
And, you know, they come there to hear you guys talk all day. And
Yes, like a cult.
it's like a cult?
Yeah.
In a good way, though.
In a good cult. Yes, a good cult.
Okay. I mean, in the stuff that they hear, some of it's new, some of it's old, and a lot of it is common sense. And you were talking a
All
lot
of
about
it is common sense.
Right.
But of course, when people use the word common sense, what they mean is uncommon sense. Because the standard human condition is ignorance and stupidity. And so when they say old Joe has common sense, what they mean is he has uncommon sense.
I guess it's a bit of a misnomer then. But
It really is.
so, yeah, why is it that people can't think clearly about investing or decisions in their lives?
Well, they don't think very well about sex or gambling either. You know, the standard human condition is a lot of miscognition.
And there are ways to make hay of that, or
Yes, you can take advantage of other people. You can improve your own life by eliminating your miscognitions.
Let me shift gears a little bit, Charlie, and ask you about the U.S. economy. And what is your take on where things are right now?
Well, obviously they're booming, but you know, the economy sometimes booms and sometimes it doesn't. And you have to live your life through both episodes. And our attitude is we just keep swimming, and sometimes the tide is with us and sometimes against. But we keep swimming either way.
Are you surprised by how long this expansion has lasted?
Of course, it's lasted a long time. But what was really remarkable is that we never printed money so much and spent it so fast and bought back so much debt, public and private. So this is total terra incognita in economics. And nobody knew for sure how it was going to work.
So is it risky then?
Of course it was risky, but it worked. And I don't think they had much else that would work. They weren't set up to do stimulus. Too much controversy, democratic inertia, various kinds. So they had to do something, and all they had left was just to print money and start buying things. And that's what they did. And it turned out to be a very wise response. And what's even more remarkable is that both Congress and the presidency and under both parties made the same decision. They all cooperated. It was the last time.
But where is that going to leave us ultimately?
Well, it left us licking the Great Recession, so maybe we ought to try cooperation again since it worked so well once.
How much is President Trump responsible for this current economic situation?
Well, I think he deserves some credit, but a lot of it just happened.
Economic cycle?
Yeah. And the decisions of his predecessors.
What do you think about the president's campaign to lobby the Fed to lower rates or keep rates low?
Well, I think presidents have always done this. If you're a politician in a democracy, of course you want people to print money and spend it. And of course it's not a good idea. The best example probably in the whole world is Singapore, which has zero debt and never prints money and spends it, and is one of the most successful places on earth. I wish we were like that, but there's only one Singapore.
Well, some people now say that federal debt is not a problem at all.
Well, if you believe that, you believe in the tooth fairy. Because then we don't have to have any more taxes ever. We'll just print money and live happily ever after. It obviously won't work.
So
There comes a point when printing money is counterproductive.
are we at that point? Are you concerned?
No, I don't think we are at that point. But nobody knew where the point was going to come. And we don't know now. None of these people who are so pompously sure of things, because we all want reassurance, and so they provide it. But nobody really knows how much of this is too much.
And do you have any thoughts on Jay Powell and the job that he's done?
Well, I think a lot of him. I think he's as good a choice as we could have made.
One consequence of this expansion, or actually it precedes that, it's just something that's occurred in our economy over the past 50 years really, has been wealth and income inequality.
Yeah.
One, do you see it as a problem? Two, if so, how do we address it?
Well, it's a problem if enough politicians are screaming about it. That makes it a problem. If it weren't for that, this one will go away by itself. It happened by accident. We were in desperate trouble. We were on the eve of a great recession that could have been a Great Depression, and then followed by the rise of people like Adolf Hitler and so on and so on. So we faced a real catastrophe. The only weapon they had with this huge was to print money and spend it. And they did it. Well, of course, and they drove interest rates down to zero, or real interest rates. Well, of course, that lifted asset values for the people who were already rich. Nobody was trying to make the rich richer. It just was an accidental byproduct of a correct governmental decision made on a bipartisan basis. And since it was a weird byproduct that occurred in a weird time, it will go away by itself in due course.
It'll go away by itself, you
Sure.
think? So there's no reason for...
The people that are screaming about it are idiots. It's going to go away by itself. Now, that's not to say that we can't raise the minimum wage a little and enlarge the social safety net a little. We should be doing that as we prosper. Both parties agree on that.
What do you think about the proposals put forth by Alexandria Ocasio-Cortez and Elizabeth Warren that would sort of greatly address this problem?
Well, I don't consider those two necessarily the best prescribers in the world. They're kind of likable. I particularly kind of like Elizabeth Warren. She's got a manner that appeals to me.
Really?
But I don't agree with her attitude. I don't think she's studied Adam Smith enough.
And what about AOC? Do you have any take on her?
I don't think she knows who Adam Smith was.
I want to ask you just a few more questions about politics, and we can talk about the markets and Berkshire a little bit more. What about the situation that we find ourselves in with the Mueller report and the way Congress and the Democrats are fixating on that and the president's on the defensive? What is your thoughts, thinking on that?
I tend to avoid the whole subject, just as I ignore tide with me, tide against, and just keep swimming. Both parties are so partisan now that they're blinded by their anger, and I don't want to be blinded by my anger, so I control it, and I would recommend it to both parties. I think they should all cool it.
Why are we so divided up, Charlie, right now in this country?
Well, anger, when you pound on one another, feeds on itself. That's one of the great difficulties with it. It's irrational and it feeds on itself. So I liked the world when it was Dwight Eisenhower against Adlai Stevenson, and more civility, and Ronald Reagan and Tip O'Neill got along, and a lot of it was done. My war was a bipartisan war. And in the aftermath, foreign policy of the United States was a bipartisan policy. I like that world better. I hate this extreme hatred on both sides.
Will we ever get back to those days or get to new days where we don't have the hatred?
Probably. If you live long enough, a lot of good things happen and a lot of bad things happen.
Fair enough. It's my understanding, Charlie, that you were instrumental in helping Warren get away from focusing on the cigar butt form of investing and looked more towards companies that I guess you could call them branded companies.
Better businesses.
Better businesses, right?
Yes.
How did you help him make that decision?
Well, it was perfectly obvious, and he'd made so much money in the other technique that it was hard for him to leave something that had worked so well. But it was not going to scale. So when he started looking for investment values in great businesses that were temporarily under pressure, it changed everything for the better. Now we could scale up to the big time.
Are Apple and Amazon technology companies, or are they brand companies?
Both.
Someone told me they asked Warren if he could buy one brand, this was about 40 years ago, what that company, what that brand would be, and he said Gillette, which makes sense. What would that company be today?
Coca-Cola.
Still?
If you take the amount of Coca-Cola drunk in the world in the main flavor, it's one hell of a brand. Now, it's such a different product from this stuff on the internet. I don't have the same. My judgment would not be as good on the internet as it is on Coca-Cola.
I want to get back to Apple. Tim Cook was at the meeting yesterday.
He was indeed.
Did you get a chance to speak with him?
I did.
Can you tell us what you guys talked about?
Nothing. We exchanged pleasantries. But he's a wonderful guy, and of course it's a huge record that he's building.
Let me ask you a little bit about Kraft Heinz and that situation. During the meeting yesterday, we found out that the chief marketing officer was leaving the company. Did you know that, and what does that mean for the company?
I knew nothing about it in advance. What happened there was very easy. The truth of the matter is that Heinz ketchup is a stronger brand than Kraft cheese, and they paid more for it. So one acquisition worked brilliantly and the other worked poorly. Well, welcome to adult life. It happens to everybody.
You mentioned that you think that Tim Sloan could still be or should still be the CEO of Wells Fargo?
Yeah, if I were running the world, Tim Sloan would still be the CEO of Wells Fargo.
Well, why did he leave then?
Well, he made this decision, but he was being pushed hard. He did it for the benefit of the company. There was just so much of this partisan hatred was washing off against Wells Fargo. It's understandable. He was there for a long time. The company had defrauded its own customers. Nobody was seemingly being punished for it in some people's minds. Listen, 2 CEOs left under pressure. I regard that as a lot of punishment. So I don't think these people were failing with their anger. They removed 2 CEOs, but now they went out. It's like Tim Sloan was not responsible for the crazy incentive system that created the trouble. So they threw him out the way you'd take out the charwoman when you raid a gambling establishment.
Getting back to Coca-Cola, you mentioned that it would be a bad idea if it got into cannabis. I mean, why not? Doesn't it make sense?
Because it's such a wholesome brand and associated with happiness. Why do we want to associate it with a recreational drug?
Well, they have to grow.
I think that would be a terrible idea.
What about Boeing and the 737 MAX? I mean, they're going to fix that. Would you go on the plane?
Fix it.
Would you go on the plane after they said it was fixed?
Yes, of course. And they will fix it well. But I don't think it was really all that excusable that they made the mistake.
I want to ask you, Charlie, a little bit about...
that was a serious mistake.
Yeah. So then they're still working on it.
Yeah, they'll fix it. Boeing probably has the best safety record in the world if you take 60 years. And this was a very unusual lapse. There may not be another one for 60 years.
Is that lapse symptomatic, though, or indicative of us developing software that's too powerful and we don't understand the consequences of it?
No, I don't think the problem was that. I think it was just an absolute lapse of being a big bureaucracy.
You also mentioned at the meeting yesterday doing billion-dollar deals overnight with very short contracts.
Yeah, we've always done that.
Has that ever blown up on you?
I can't think of a single example in my whole life where keeping it simple has worked against us. We've made mistakes, but they weren't because we kept it simple.
And that's simple.
I would say that the chief advantage that Berkshire has had in accumulating a good record is that we have avoided the pompous bureaucratic systems. We've tried to give power to very talented people and let them make very quick decisions.
I want to ask you about something that's talked about all the time with you guys, which is succession. And you talk about that all the time, and this has been countless barrels of ink spilled. But if you're getting older, how do you make the decision to step back if you may not have the mental acuity to make that decision?
Well, I think you'll be surprised at how well both Warren and I are capable of stepping back when we feel our powers are too far deteriorated.
Have you talked about that?
Sure. And Warren has told people to speak up when the time comes. If we've been rational all this way, do you think we're not going to try and be rational right to the bitter end?
Is the process, I mean, we're sort of in the middle of the process. You've been giving more and more control or authority to Ajit and Greg and Todd and Ted. So it's sort of a continuum, a process like that?
Of course. And by the way, it's working fine. It's amazing how good this next generation is. And they're steeped in our non-bureaucratic ways. There's these big bureaucracies, they think the work is done if you get it out of your inbox and into somebody else's inbox. That is not getting it done. Getting it done is when it's done, not when it's in somebody else's inbox. And if everybody's in a big committee meeting all the time, you're worn out at the end of the day and you haven't done anything.
Are Ted and Todd making all the stock choices at this point?
No, of course not. Warren steps in and does big things.
Where do you think, Charlie, the biggest opportunities are globally right now?
Well, I don't think we have a master plan of knowing where the opportunities are. We're trying to find intelligent things to do with a torrent of surplus cash. And we've always had a torrent of surplus cash. And we're always looking for intelligent things to do with it. And if we find things that are intelligent to do, we do it. And if we don't find anything, we let the cash build up. What the hell is wrong with that?
Not much.
Yeah, not much is right.
So I know that you guys have talked about England, or it seems that you have, because Warren talked about doing this article in the FT as basically a way of signaling potential interest given that Brexit may create some opportunities. Is that the case?
What the hell do I know about Brexit? I don't even know how I'd vote on it if I were in England. Yeah, I don't know much about it. Look, we'll react to opportunities wherever they are, and we regard the vicissitudes of politics as it's just what they are, vicissitudes.
But isn't it a little bit more than a vicissitude to drop out of the European Union? I mean,
I'm not suggesting it isn't a good deal, but this country was enormously helped when we put all the colonies together. If we had internal tariffs against each little colony, the United States would not be as big as it is. So it's understandable why Europe wanted to get together. And in addition to the advantages they got from the free trade, they'd had a long history of having wars. And we all are in sort of one big place trading with one another. It'll be safer. Those were very good ideas. I'm not quarreling with the basic ideas. On the other hand, if you have unlimited immigration from one country to another, that causes lots of strains. Look at Germany. Merkel brought in more immigration than her people she wanted. She was leading a parade and she looked back and nobody was following. So these very few people want unlimited immigration of a different culture. We made it work in America, but we had a vacant continent to work on. It was easy. Vacant and rich, oil, minerals, wonderful soil.
Should we still be letting immigrants into this country?
I think we should have way more control of our borders than we do.
Isn't that different?
Donald Trump is right on that, and I think the Democrats are committing suicide by being so. They hate him so much that they're against him even when he's right.
It seems like the borders is conflated with immigration policy sometimes, though, right? I mean, in other words,
of course they are.
Yeah.
But I think we ought to have some control over immigration, some effective control. I think the bulk of the people want to be very nice to the people that are already here, including all the people from Latin America, but they want more control over the inflows.
Are you concerned about this rise of somewhat nationalistic leadership around the world, like in Turkey, in Brazil, in China, in the United States, arguably?
Well, take Brazil. Who in the hell would like Brazil? It's a great climate and a great country, but they're screwing it up to a fairly well.
You mean the new leader or just what's happened previously?
What's happened generally.
Yeah. Okay. So does that require a strong man to take over, though?
Well, I don't think I've got deep knowledge on exactly what works well in the internal politics of every other country. Who would have guessed that the Chinese communists would improve their big country as much as they have in the last 30 years?
That surprised you?
Well, they didn't. The first 20 years, they had the Cultural Revolution. It was crazy. And now they have one of the greatest success records in the history of mankind. I don't know about you, but I did not predict it.
I didn't. But what is the secret to China's success then?
They copied Singapore.
Which
and
is?
Remember, the communist leader said, I don't care if the cat is black or white, I care whether it catches mice. And they copied a very wonderful, famous Chinese man in Singapore, and lo and behold, they found the right Chinese leadership outside of China, which amuses me. Now, he was Chinese. But look at the way it worked. In the whole history of the world, no nation that big has ever advanced that fast. And they did it by having a bunch of poor people save half their income. They did not use the wealth of the rich world to get ahead. They used the savings of poor people. I am a huge admirer of what the Chinese have accomplished. And if you ask me who is the one man who did the most for China, it was Lee Kuan Yew of Singapore. They copied him.
Are you still sanguine about the future for China right now? There's a lot of concerns about slowing growth and leverage in the system.
I'm quite optimistic. They've been succeeding for a long time. Sure, they have ups and downs, and they make mistakes as well as good decisions. But if you average them out, the Chinese are getting ahead. They're not moving backward.
What do you think the economic relationship between China and the United States looks like, say, 2 years from now?
Well, if both sides have any sense, they will be better and better friends and adjust all differences. It is stark raving madness on either side not to make a friend of the other really powerful nation on earth.
I want to ask you a little bit about some Silicon Valley stuff. I mean, you said yesterday you were ashamed of missing on Google.
Yeah, I am. We could see, if we looked carefully at our own companies, that their advertising was working way better than other advertising. Just we weren't paying enough attention.
So is it too late?
I don't know. I don't know everything, you know.
Well, we'll leave that aside. But, you look at these tech investments. So there's Apple, now Amazon. Did you know about the Amazon purchase? Were you involved in that decision?
No, of course not. I've never owned a share of Amazon. I'm a huge admirer of Bezos. I think he's been sort of like Lee Kuan Yew. He's a leader that's all by himself. He's been just a perfectly amazing human leader. But it's always been too complicated and uncertain for my particular temperament.
It's interesting.
And I find other things to do that'll work fine.
Someone was telling me the other day that they thought that you could actually sort of think of Apple and Amazon not as technology companies so much, but as big branded growth businesses, which would be something that would be appealing to you.
Well, I think they're both
right.
brands and technologies, and it's hard to separate the effect of one from the other.
Okay. And as far as what's going on in Silicon Valley right now with IPOs, unicorns going public and not having any profitability or any prospect of profitability in the near term, what do you think of that situation?
Well, there are a whole lot of things I don't think about. And one of them is companies that are losing $2 or $3 billion a year and going public. It's not my scene.
Have you looked, so you're not interested in Uber or companies like that necessarily?
Well, I have to be interested when they're that important and sweep the world and change practice. But I don't have to invest in everything I'm interested in. I'm looking for things where I think I can predict what's going to happen with a high degree of accuracy. And I have no feeling that I have the ability to do that with Uber.
Right. I want to ask you about architecture, which is something you've been interested in for a while. How did you get interested in that, and what is your current
well, I had an uncle
there?
who was an architect, and I've always thought it was the queen of the arts. In other words, I think architecture does more good than painting or sculpture. So I think architecture is hugely important, very interesting, and does such enormous good when it's done right. So I'm a big admirer of the potentiality of the profession. But I think a lot of people go into architecture because they're sort of frustrated sculptors, and they don't think with enough common sense or uncommon sense about what the hell they're doing.
What are some projects that you've been involved with, though?
Oh, I've built houses, I've built office buildings, I've built apartment houses. I've helped charities and educational institutions build things. I've built science centers. I do a lot of it. I like it.
Is this a creative outlet for you?
Yes, absolutely.
Do you have some projects that you're working on right now, some architecture
course.
projects? What are they about?
Well, I'm working on projects at UCSB, University of California at Santa Barbara, and it's basically housing, but of several kinds.
I want to shift gears and ask you a little bit about repurchasing shares. You said in the shareholder meeting, I predict we'll get a little more liberal in repurchasing shares. How much more aggressive will you get? And do you think that's going to be a problem potentially with the Democrats?
Well, a politician that's in the business of howling about something, trying to create a sense of outrage, they're always complaining about something. And it is true that a lot of people, it got so popular to purchase shares that some people repurchased them even when they were too high priced. We will never do that. We're only going to buy them back if they're too cheap. But of course that ought to be done. If you had a partnership of 3 of your crippled relatives and one of them needed some money, wouldn't you buy out the crippled relative with the company's money? It's just simple morality. But I do think it's being overdone by some people, and it undoubtedly is being done to prop up values, which I regard as an improper use of the share repurchasing technique.
Should there be laws about that?
No. There are laws, but we shouldn't be telling people what the right price is.
Right. So I want to ask you a little bit about the social safety net we were talking about and Medicare. And do you support Medicare for all? Would that be something you'd be interested in?
Well, I'm one of the few Republicans you'll ever talk to that thinks we should have a single-payer system, but not one of the type that we're going to get. If you look at the single-payer system of Singapore, it costs 20% of what ours cost, and that's an advanced, civilized, high-income nation. And of course, the people are a lot healthier. Well, of course, I'd rather spend 80% less and have the people healthier. And of course, I'd like to have American manufacturers not have this terrible burden of unnecessary health costs that affects their competitiveness in the world. So we have an insane medical system that grew like Topsy by accident with the help of a lot of dumb governmental intervention. Not all of it was dumb, but some of it was. And the system is ridiculous. If a young family has to pay a $5,000 deductible to have a baby, they don't really have medical insurance. It isn't just the Medicare that's wrong. The whole damn system is going wrong. And the amount of unnecessary tests and unnecessary prolongation of inevitable death that's going on is a national disgrace. Of course I don't like it.
Have you ever thought about moving to Singapore, Charlie?
Well, no, but I'd like to move some of Singapore's results into the United States. They have practically no deaths from opioids. They have a low crime rate. They have no debt of the whole country. No, they're doing a lot right. I wish to hell our politicians in both parties would spend a lot more time studying Singapore.
But some people say, many people say, it's an authoritarian government. There's a lack of freedom there.
It's a democracy. It just does such a good job that the people keep re-electing it. I like that result. What the hell's wrong with that?
I was with some people just a few minutes ago, actually, and they were kind of recounting some of your zingers. Do you spend time before the meeting, say, oh, I've got like these 6 zingers I'm going to get out during the annual meeting?
Never. Think of all the people you know that have tried to take one extra step and have fallen off a cliff.
Well, on that happy note, we will conclude the meeting.
That's just come to you?
Yes. I think the meetings work better if they're spontaneous. If we were scripting things, I don't think people would like it.
So you and Warren don't say anything at all before you sit down there?
Zero.
You have no idea what's going to happen?
That is correct.
That's fantastic. So I want to ask you just a question or two about growing up. And you were at the University of Michigan, and you dropped out and joined the Army, right?
I certainly did.
And
we all did in those days.
Yeah, so how did the Army influence you?
Well, everything influences you in your past life. And yes, of course it influenced me. I never wanted to be in a big bureaucracy. I was well toward the bottom. I finally got to be a second lieutenant in the Army. I was way down in the ranks, and nobody gave a damn what I thought about any subject. They just gave me a little job to do, and I was supposed to do it. And of course I didn't like that, as well as having a freer rein to control my own destiny and so on. So I am much better adapted to being a capitalist operator than I am to being a cog in a bureaucracy.
Did you ever get in trouble in the Army?
Of course.
Tell us about that.
Well, my senior officers could tell I thought they were wrong. And I tried to hide it, and they could still tell. And so, of course, I never got in any serious trouble, but who in the hell likes a junior officer? You look over there, and he's plainly indicating he thinks you're an idiot.
So that didn't work out too well.
Well, it worked out all right. I did my work well enough so they didn't bother me. But it was not a milieu where I was going to succeed.
Right. So how did you figure out, a lot of people look at your life and, would want to emulate what you've done. Is that something that people can do, look at someone like yourself and see your path? I mean, you're in real estate law, then investing. What do you even consider yourself? A businessman? How would you describe what you do?
Well, I don't consider myself I think my way of thinking will work for anybody, of trying to be very rational and disciplined. So I think that much. But to flit around to various careers and go into the other fellow's professional territory and try and outdo him and do all kinds of things like that, I think will not work for most people. And so I always I'm always being visited by young men who say, I'm practicing law and I don't like it. I'd rather be a billionaire. How can I do it? And I tell them, well, I'll tell you a story. A young man goes to see Mozart. And he says, Mozart, I want to start composing symphonies. And Mozart said, how old are you? And the guy says, 22. And he says, you're too young to do symphonies. And the guy says, yes, but you were 10 years old when you were composing symphonies. And Mozart says, yes, but I wasn't running around asking other people how to do it.
Right.
So I think this flitting around business is something not everybody should try.
Yeah, I think
if I tried it again, it might not have worked as well.
You said just figure out how
I may
to
have
do
been
something
quite
and do
lucky.
it. Why were you were lucky?
Yeah, I think I had some luck, yes.
Well, but I think there's more to it than that. I mean, where were you looking?
Yes, the combination of luck and skill. That's what all good records are.
Right. So let me just ask you a few more questions. And do you eat all that peanut brittle up there, right?
Yeah.
Is that your one peanut brittle day, or do you eat
Yeah,
peanut
it is.
brittle? Really?
Yeah, it is.
So the other 364 days you don't eat much of it.
They put it there. I think Warren is so businesslike. He likes promoting peanut brittle at the annual meeting.
Well, don't the other Berkshire brands get jealous and say, why don't you put like a railroad train up there or something like that?
We got a whole exhibit hall full of other brands promoting one another at the Berkshire meeting. You cannot claim that we're under-promoting.
I would never claim that. But the Coke people and the Seas people get special placement up there, don't
Yes, they do, but those are two very... Seas was our first great brand, and Coke is one of the great... It's the great soft drink brand of the world. So they're entitled to have a special place.
Do other companies ask to get put up there, though?
Well, they all push themselves forward as much as we'll let them.
Is that a yes?
Yes, of course they want to be pushed up.
And finally, Charlie, I want to ask you a little bit about philanthropy. And, it seems like Warren's been sort of a little bit more upfront about that with Bill Gates and the Giving Pledge. And I know you're philanthropic as well. What is your thinking on that? How upfront?
Well, I wouldn't sign the Giving Pledge because I've already transferred so much to my children that I've already violated it. So I think I'm seeking false credit if I join them and say I'm a big philanthropist that's going to give more than half of my wealth to charity. I've already given more than half of it to my children. So I can't join them. It's like coming back from the dead. I can't do it.
But doesn't that make Warren mad? I mean,
No,
come on, Charlie, just
he's
shut
not mad.
something.
When is Warren mad about somebody else's? Warren thinks that each Berkshire Hathaway is entitled to do with his own money what he damn pleases.
So let me just follow up on that, what you did then. What was your thinking in terms of giving away money like that, though?
Well, it's simple as itself. I had a wonderful wife. Most wives worry that the husband, if he survives, will get involved with some nurse or something in his dotage, and that the money will go away from the children. And I knew that my dead wife would have preferred to have the money go to the children, so I arranged that she got her wish.
Right. So any thoughts on how the meeting is going to be different next year? I mean, when do you start talking about that, or do you even talk about the annual meeting?
We never talk about it. We just do what works as long as it works, and when it stops working or it indicates it's going to stop working, we'll stop.
Did Apple say they want to have some exhibit in the convention center this year?
I had no discussion with them. I don't have any idea what they're doing.
And do you see a time when Ajit and Greg and Ted and Todd will come up there with you at some point?
I don't know how it will morph. I don't think that what worked in one era has to be duplicated in another. I don't think what we're doing would work for many people. I think it was an historical accident. We didn't do it on purpose. We just sort of drifted into it. When it worked, we fanned the flames. But we didn't create it with any forethought. And I think some later generation will have some different system. I think there's more wiseassery in our meeting than would be appropriate forever. And I'm the principal wise-ass.
Yeah, you are. Charlie Munger, Vice Chairman of Berkshire Hathaway.
Wise-ass.
Wise-ass.
Right.
Thanks very much for joining us. I'm Andy Serwer. You've been watching Influencers. We'll see you next time.